we're going to be bringing on a local businessman, a friend of mine. I've known he and many of his family members for quite a while. So what I want to share with you first is what my goal here on YouTube is to share my story as a business owner, and share with you a lot of the things that were never taught to me, whether it be financial advice or investment opportunity advice or banking or a whole array of things. But tonight we have the special honor of bringing on a local entrepreneur himself, my buddy Chris and Buren. Are you there, sir?
Yes, I am. I am.
What's up, man? How are you?
Doing well. Doing well.
Good.
Thanks for the introduction.
Yeah, man. So, what I was saying is that I guess us as business owners get really kind of frustrated. We get kind of down and out. We get, I don't want to call it discombobulated, but we're always searching for the next better, biggest, whatever you might look for. And we get, yep. So we get caught up in the rat race of running the business because we're so focused on building the business and doing the next biggest thing. A lot of things either are not presented to us or not in front of us when we're looking for them. We're so focused on running it. And I thought it'd be great to bring you on because you and I have spoken many a times on some lending opportunities. And I think for someone either starting out in business or already currently in business, financing is the key, whether it's your own finance, which is, it can be dangerous if you're doing it yourself. But as we've discussed, that I think a lot of small business people are trained to go down to the corner to the local bank. And I'm a victim of that myself.
Mm-hmm.
You run down to the bank and you put in this application and your credit's good and you're building this business and it's a great dream for me.
And they kill it.
And the bank comes back and says, you know what? We see that you have the money. We see that you're bankable. And, we're just not going to be able to do anything at this time. But yet you've spent, if you've been in business, you spent years trying to build this, right?
Sure.
And you can't understand that, you might be working on your credit. You might be building your business credit. You're still running the business. You're still trying to be profitable. This local institution or national institution, whatever it may be, you don't get to see the underwriting side of what they do and their criteria. They just come back and say, unfortunately, at this time, there's nothing we can do. And I'm sure with you, you've seen pretty much the same thing. You probably talk to clients all the time.
Every day.
And they're doing great in business. They're profitable. They're, building a financial future for their family, but they can't go to a bank and get a loan.
It's a sad fact. Unfortunately, for most lenders, you're not considered a small business or an established business until you're 3, 4, 5 years in business before they'll even remotely start touching you. Their underwriting guidelines are just very, very stringent, and you'll find that 90% of all financing happens with what we call alternative lenders.
Yeah.
So we're the ones that are the backstop. People like me and the companies I work with are kind of the backstops that help small businesses owners get from point A to point B. Our whole mission at ARC Business Capital is to provide sound financial products that are going to get a person to their next level. And so we educate them on the process because it's, a lot of people might have a misconception like, oh, I want to go in and, I want to know no credit check and no personal guarantor. And we just have to understand that that's a fantasy. It's not going to happen. Unfortunately, in today's society, we have to realize that credit is very, very, very important.
Mm-hmm.
And we can't get around it. The banks are going to check your experience. They're going to check your business experience. They're going to check all of those things. They're not just going to give you sums of money without looking for what kind of track record you have. Have you paid your bills? Have you managed your company? And unless you know those items, you find yourself going to banks with a great idea and then being turned down and being discouraged.
Or like me, you could have been in business since 2004, never bounced a check, never overdrafted. I mean, countless things I can think of, and still get minimal amount of approval, showing true bankability.
Mhm.
You know,
They're
and
very hesitant.
yeah, and I mean, I've learned, and I don't mind sharing, a lot of traditional banks, what a small business is looking for as far as dollar amount, they're not interested in. You know, so the banking system, you know, for our YouTube followers here, the banking system has what's considered uh, very low interest rates or manageable interest rates, and they only loan on a very strict criteria. But in addition, they do give you that very low interest rate, but the criteria is so high, nobody qualifies because they're not asking. Actually, they're actually not asking for enough money for that low interest rate that the bank is charging you.
Right. All of a sudden, they were like, "Well, look, you're at $250,000 or more at a 5% rate, but everything has to be impeccable. We want to see collateral. We want to see 700 FICO scores,
Yeah.
and you're just filling out papers and chasing the carrot." And in the alt finance space, this is where we kind of come in because the rates aren't the bank rates, but we're going to get you from A to B. And I have companies that will lend as low as $5,000 in monthly revenue. Will match your revenue to get you to that next stage. That's just one of several programs that are available out there for business owners to kind of take advantage of. So it's just a matter of understanding, time in business. 3 months. Most lenders are looking for alt lenders are looking for 3 months business bank statements.
Mm-hmm.
The biggest thing that kills deals, and I've had more deals die at the table, is business owners run negative balances. Unfortunately, you can't ask somebody to borrow money when there's negative money in your account. The bank wants to see the fact that you're going to be able to pay back this financing, and if you're already running negative, that's going to kind of kill you. So there's a lot of management that goes into qualifying that people have to realize. Like, look, I need a 90-day window where, like, I'm just following, I'm keeping everything on point, and then the doors start opening. And once you get into the system, it rolls from there. Because once you get one loan, they're calling you back. If it's a 4-month loan or a 5-month loan or a 12-month loan, they're calling you back like, "Hey, we can give you some more money because we now have a track record of payment history." So money gets you more money. So it's like you got to borrow something, show you can pay it back, and then they're going to keep on giving. They're going to keep on feeding it to you.
Right.
Specifically for startups, I find a lot of people startups, they find it really, really hard. And some of the main programs that I use for that is either my unsecured credit line program, where we're able to get anywhere between 25 and about 100K in revolving credit lines. Again, criteria, a 680 FICO score, but that's it. I don't need W-2s, I don't need pay stubs. All you have to do is set up a business name. We can set up the accounts in the business, and we got to run. But the key is having that credit score and having that credit card utilization at about 45%. So it's just a matter of knowing where you need to be at to fit into the matrix that the bank wants. Once you're in that matrix, you jump in, do what you got to do, and then you run out and do it, and you're off to the races.
Right. Yeah. So kind of going off track, I found that a lot of people that I talk to, they almost, when I say people, customers, or maybe potential investors that are looking to invest in some of the projects that I work on, they always like to hear kind of my story. So I'll give you this opportunity. Kind of tell me, like, where you're from, what's your background and what you're doing. So, our followers here will kind of have a better idea that you're a person that you can actually, like, reach out to and call on the phone and talk to. Because at some bank, I'm stuck with the branch manager or the loan officer, and all my paperwork's being done in some other state at some underwriting conveyor belt or whatever.
Well, my original story, originally from New York City, by way of after the real estate market crash, I used to have a mortgage broker company. It was quite successful. Real estate market died. Had to make some adjustments, and actually came down to Maryland to reconnect with family that I hadn't known prior to.
Okay.
So that's when I met, people like my Uncle John,
Yeah.
DJs. And so I really got, started falling in love with the DMV area, met some great people, made some great contacts, but I was always entrepreneurial. So I did different things. I mean, I've done everything from bartending. If there's a gig to make money, I'm about it. But I went back to my core competency, which is basically doing consulting, helping people. I understand the financial structures. And I opened up 2.5 years ago. I went back into business funding, and that was actually through a relationship I had with another client of mine. We were talking about some things to helping them with their website, and we started talking about business loan brokering. And next thing you know, I was like, "Hey, I can get into that." And it's been smooth sailing ever since. I mean, it's nothing like helping someone go from making only $5,000 a month and then seeing them later jumping up to $30,000 and $40,000 and $50,000 a month.
Yeah.
And it's just a matter of riding with those people. So my claim to fame is that, I'm going to be here today. I'm going to be here tomorrow. You can call me next year. My phone's not going to be off. I'm here for people. I check in on all of my past customers just to make sure, like, hey, how's everything going? Let them know what the new products are. Because it's a relationship. I mean, a person's in business not for just today. They're usually in for the long haul. They have a legacy they want to start building, and I want to just be a part of those dreams.
Yeah. Yeah. No, I mean, that's great. I mean, I think a lot of people don't understand that especially in small business and literally dealing with the customer, dealing with the end user, people deal with you based on relationships, and I've always seen it. They come in, they question what my capabilities are, what the company's capabilities are, and then can we produce what we're selling them or what we're pitching them.
Correct.
And I think you really do have to develop that bond with a customer or that bond with a potential borrower or lender or whatever it may be, because it speaks volumes when you produce what you say you're going to produce. People listen and say, wow, he did exactly, or she did exactly what they said they're going to do. And I've found in the larger institutions in banking, especially, they don't care about me. They don't care about my business. They don't care about deposit history. I mean, they say they do, and they say a bunch of things that makes you feel good about it. But it's like, really, guys, I mean, we understand. You and I have discussed this, but I think for some of our followers, they don't understand it because they've always been taught, well, you go get a good job, and then you go to the bank and you apply for a mortgage, and then you qualify for the mortgage or you don't. Who knows? And then you get this 30-year amortization loan to live in a house. But I think for the business-minded person, their mindset is not really what's the process, but how do I do it this way? How do I not do it that way? Because I've been banging my head at the bank's door, and every time I go to that bank, I'm banging my head, and they keep coming back with either zero or very minimal amount of funding.
Yeah, they come back with excuses.
all the time. So I was going through your website today to kind of pinpoint some questions for you.
Okay.
And so I guess explain to everyone more about the type of funding, not the specific programs, but the type of funding that you guys really specify in. Like what is your focus market? Where are you really seeing, not from your end, but where are you seeing the biggest benefit from someone like me who's a business owner who is applying for one of your funding opportunities?
I think first and foremost is my credit line program. I think that's the one that gives my customers the biggest leverage. Unsecured credit lines, 0% interest for 12 to 18 months, revolving lines of credit. So everything about that program is just business orientated. It's in the business name. It's revolving, so you pay it down. You have it there. It's not like trying to reapply over and over and over again after you get a straight loan.
Yep.
You basically you manage that line. When money comes in, You pay down your credit card, you create on those balances, and you have those funds available to go back and charge forward. My second strongest area is equipment. Basically, it's collateral-based financing.
Mm-hmm.
Collateral, you can have a 580 credit score, but if it's the right piece of equipment, the bank's gonna lend on it. If it's it's titled equipment, we're talking bobcats, landscaping equipment, things, heavy machinery. They're gonna eat that up all day. Yeah. Transportation used to be my hot spot, but last year was a tough year for transportation. A lot of trucking companies went out of business, so the market got a little cool on them. I mean, that used to be. I mean, I could take a straggler almost, and if they had a CDL, I can get you into your own truck. But it's a little tougher right now. I mean, they're shying away from the one truck owner. They're looking for someone who has a fleet, which is at least 5 vehicles. But you got to buy the first vehicle to get 5 vehicles. So it's kind of a catch-22. So we're just waiting for the scales to balance back out. But that's always a great sector. So and then the third one would be merchant cash advance. That's the fast, quick, easy money.
Okay.
3 months business statements. I match your deposits. Only thing that sucks about this program is that it's expensive. I'm gonna just say what it is. It's hard money, but I can get you the money in 24 to 48 hours. So if you got to make payroll, you got an opportunity to make a purchase that's going to go, that you're going to save 50%, and there's a great markup on it. Hey, I come in, have the money in your account in 24 hours. You do what you got to do. It's pay back in 6 to 8 months. We're rocking and rolling. So sometimes we can't get caught up in the price. We got to look at the value. Yeah. So if I'm borrowing money at X, what am I getting, or what am I going to produce of value that's more than what I borrowed for? Because then the money then it's not as much of an issue until you get to a point where you have stronger credit, where you'll have better leverage, and then you can buy it and get it at a low interest rate. But if you're not 100% right now, that's the way it kind of getting there and incrementally working on things to make your credit profile better, but get that money to not lose out on opportunities.
Yeah. All right. So what you're saying, for you and I, we understand this. I'm in business, you've been in business, but for the simple-minded entrepreneur starter program, if somebody says, you know what, I want to go into the ice cream business. I see food trucks all the time, and I want to go buy a food truck. I don't know what I'm doing per se. I want to start it. Right? So I want to start it, but I have a good credit score because I have a 9-to-5 job. I pay all my bills on time, and I'm setting up a new entity, a LLC. And I want to go buy, as you said, I would consider a truck. I mean, I know it's transportation, but it could be a piece of equipment, whether it be equipment on the truck or something. What program would you suggest them to go with? I mean, is there maybe not a specific buy the piece of equipment, but someone who wants to get into business? Their tax advisor said the best thing you should do right now is start a new business because you get all the tax incentives and the deductions and everything else. What do you currently offer for that?
I would say realistically, if it's not equipment, it's the credit line program, because literally I'm getting you off of the strength of the fact that you have a great credit score and you're still working. I have a hybrid of it, but I'm getting you 25 to 100K. So, I mean, I'm getting you 10X. Basically, you can look at it this way. Whatever your current credit that you're doing on personal, when you go into business, it 5X, 10X that amount. So if you're running $10,000, $20,000 in credit right now, that's going to get you 40, 50, maybe even $100,000 in credit lines in the business to have that startup capital, to have that backdrop. Because unfortunately, as we know in business is like children, I say, is that they always need something. It's always full of surprises. So, a lot of people might put in their last dime and not have the credit financing piece behind them. And then when something happens, then they're drowning underwater. So I usually try to get people like, okay, well, look, let's work on the credit. Let's get these credit line programs and utilize that leverage so that way you have your money in the bank to help you should something go wrong. So that would be my first and foremost, is going on a program like that for a startup. Okay. And I would probably tie that in with Again, this is a little bit more. This is more risk because this is now going to go into personal. But
Mhm.
there's programs where if you're still working W-2 and pay, got a W-2 and pay stub, I can get you I can get you term loans. So I can get you credit lines and term loans. So when we combine the two, all of a sudden I might double the amount of money that you're able to get because I can get you a fixed rate loan or at maybe a $50,000 fixed rate loan over 5 years at a
Mhm.
regular interest rate, and then get you a credit line at 0%. And now you have the cash and you have the credit lines, and now you're able to go out there and and build your empire.
Yeah, sure. All right, so that's the unsecured revolving line.
Unsecured revolving and in term loans. So it'd be actually two programs. I basically take you in two directions. One would be unsecured credit lines for the business, but
Mhm.
if you're willing to use some of your personal credit, especially as a startup, then we'll do some term loans as well. So we combine those two, and that doubles your funding ability.
Got you. Okay. And then I know I saw that those lines start around 10,000,
Yeah, minimum.
minimum 10,000.
Yeah.
What type of interest should they expect on? I know it's like from 10 to up to like 175.
Right. What I would say is you're looking at current rates. So you're looking 700 or A tier credit. You're probably looking at a starting rate right now. When I was looking at some stuff, it's probably about 12 or 13%. It's basically kind of in the same credit card rate range. The
Hmm.
worst case scenario could be what 24.9%.
Yeah.
So it could be a gap. But again, if you understand the concept, is like I'm getting you 0% interest rate cards.
Yep.
So if you're
Well,
going and doing this program, huh?
that's normally 0%. I mean, to be clear, 0% interest is like the first 12 to 18 months, right?
Right.
Yeah.
So that's what I'm saying. You got to have a tax plan. If you have the tax plan, I can get you money at 0% for 12 to 18 months. If you can't find a way of turning that money over,
Hmm.
there's something wrong. I mean, or you got to look at what you're doing. But you have an opportunity to use money with 0% interest, pay it down or pay it off, and not even deal with the interest, or basically not worry about interest until 12 to 18 months from now.
Yeah.
So you have an opportunity to get in the market, generate revenue, pay down these lines, and then so you're controlling how much interest you pay because you have the ability to pay down the line and reduce the amount of interest that you pay. So even if you don't pay it all off in 12 or 18 months, you know what you need to do to
Mhm.
minimize your interest exposure.
Yeah. I mean, so how simple is your program? And explain the process. I know if you guys look down below here, we actually put a link in the video description. We'll take you straight to Chris's website. I've done it myself. It's a very simple form. You fill out the form. And what did it take, Chris? Maybe 10, 15 minutes. And you called me back and like, boom, we can do this. We can do this. We can do this. I'm going to put you in touch with, our loan officer, and you guys do the criteria.
It really is that simple. I mean, you gotta love technology. I mean, literally, I shoot you a link. We go in there. They do a soft pull. So what a soft pull means is that I'm not giving you a hard inquiry on your credit report.
Hmm.
I'm basically the AI is going to be able to do a soft pull of your credit report, analyze your credit score, your credit profile, and come back with a funding assessment. And they're going to say you can get a target between X and Y. And
Yep.
if there's any issues, we'll say, well, we can get you X and Y, but you might have to do these three things. Like you might have to pay down a couple of your credit card balances, or you might have to get something removed off your credit report that's derogatory. But once you get that done, we can get you this amount of money. And generally, what's great about the process only takes about 2 weeks. So, I mean, once we're pre-approved and we're happy with the terms, you're getting the same month you apply. By the end of that month, you're having the monies in hand.
Yeah. Yeah. I mean, I can say for sure. I mean, the communication was awesome. I think you and I spoke. It was like a Thursday or Thursday evening, and by Monday, I had emails coming in saying, "Hey, we can do this, we can do that," and you know, the automation is great. I know it's technology that we're.
But I remember when you called me because I was driving. You were like, wait, I didn't hear anything. I was like, wait, hold on. Literally on my phone, like,
Yeah.
oh, you're gonna get something in a minute, but this is what they said that we got to work on. And you knew, and when I told you what it was, you knew exactly what I was like. Yeah, but I know that was there.
Yeah.
And that
Yeah.
I gotta work on it.
No, I mean, me personally, I learned. So I'm a full-time entrepreneur, lifetime entrepreneur. The only job I ever held was I was a summer camp counselor back when I was in high school.
Forever.
So, I mean, for me, I attempted college. It lasted, I don't know, 2 years at most, and then I decided to kind of move on.
Mhm.
But I've always done it kind of foolishly, I guess. But it's always been my way,
Mm.
and it was always to me. It was always I want to do what I want to do. I'm going to learn along the process. And unfortunately, back when I attempted college, I don't know if you had this same experience, but I remember going to I went to Old Dominion University down in Norfolk, Virginia, and we had this community cafeteria slash uh, um, it's not entertainment. It's a banquet
Web center.
facility and whatnot. Yeah. So we would go there for lunch and we'd hang out. And in the lobby, they always had all these really cool credit card companies,
I remember that.
and they were giving away free water bottles and frisbees and all this other stuff. And I was never, as a young person, I was never taught about credit or banking. It was never common conversation.
Hmm.
I went and got a credit card and maxed that sucker out. And then I started getting statements saying, "Oh, you can only pay $26 a month on this $1,500 card." And I'm like, "Oh, cool." So I'm
Mm.
paying $26 and $26, and every month the balance is doing nothing. It's still 15 bucks, $1,500. So I got out of that real quick and just said, I need to learn more about it. And going through in business, um, you kind of you learn from the hard knocks, and that's kind of what I'm really doing with this channel, is trying to help where I can help and explain to people. I don't want to preach to you. I want to learn with you, but I can tell you what I've done. I can tell you where I was banging my head against the wall, and learn from me, because you'll get so far ahead. You're talking about from, I mean, my print business is 2004 is when we started.
Mm.
We're in 2020, and I'm still learning, of course, but if I can just share like the stepping stones, the little tools that got me to this point, it's going to get someone else so much further ahead.
It's nothing like those real life examples, but what I find about entrepreneurs, or things I was listening to today, one of the things was that we're willing to fail forward. We're not afraid to fail, because
Yep.
not everything we do is going to work. I've
No.
had, I tried to be a gym owner one time.
Yep.
But that wasn't my lane. But I tried it.
Mm-hmm.
But I learned from it. I know that I can go into that situation now and know, okay, well, I know the mistakes I made. I'm not going to repeat the mistake I made, so I'm not scared to take that chance.
Right.
And a lot of times, with people, they're kind of held back with fear. And if you can just release the fear, like, look, it's not always going to work.
Right.
You're willing to take the bumps. The rewards are really, really great.
Right.
And that's what I work with a small business. A small business person is tired of working a 9 to 5 or 9 to whenever and fulfilling someone else's dream. At the end of the day, being a self-employed, being an entrepreneur, you're living your dream in some capacity every day. You're learning and growing every day.
Yep.
I made it through a year and a half of college.
Mm-hmm.
And after that, it was just, I just didn't understand, like, why am I going to be in so much debt? Like that caught me early. That I was like, wait, I'm going to owe all of this money before I even have a chance to make money. And my first job when I went to college was I was watching Carlton Sheets, I don't know, late night infomercials, how to buy real estate. And that got me
I remember that name.
that got me into the real estate game. And then when I was doing real estate, then I was like, okay, everybody loves these houses and this is wonderful, but then I'm losing control, because then they're like, well, give it to this guy. And then you're finding out the deal dies and you're like, well, why did the deal die?
Yeah.
And I was like, okay, well, I need to know where the money's at. So I always kind of gravitated towards the financial end, because no matter what we want, I need to know the person that can show me how to get the financing for it.
Yeah.
And I wanted to be that person, because at the end of the day, that's where I can be the most value. I can show you every pretty house, but if I can't help you get the financing, it's just a pretty house. I'm the guy that's going to show you, like, hey, you trying to get something going? I'm gonna give you the path to get you to where you want to be.
Yeah, that makes sense. So we have a question on here, Chris. I'm gonna share this with you right now, and correct me if I'm wrong, but you guys also provide a proof of funds program?
Proof of funds. What are they trying to do?
So when I was speaking with one of the loan officers, he had mentioned that they also have a proof of funds that will actually, if you can show a certain amount of money in your bank account,
Hmm.
they would actually be willing to issue, in a sense, like a purchase contract. So, in a sense, they would use it as collateral if
Okay.
you actually have. So, I mean, I'm not sure if I'm saying the right program.
I kind of I understand what you're referencing.
And I'm asking because Allison here has a question. How would you, or how could I apply uh, with no income? Is that possible?
All right. Here's the truth. If you got good credit, you can apply for everything.
Yeah.
But understand that that is only step one. Applying and getting approved is one thing. Understand that if I get you credit or if I get you a loan, terms come with that particular vehicle.
Yeah.
And if you utilize those funds, you have to have a method to pay it back. So it doesn't, I can give you all the lovely numbers in the world, but at the end of the day, this has to be repaid.
Yeah.
This has to be managed correctly. This is seed money to double up and triple up and move on up. But it only happens if there's a way of paying for it. So I mean, if you are starting a brand new business, you have no revenue, but you have to go in with the idea that look, I need to get this revenue going right away because within 30 days, the bill man knocking, and he's gonna knock every month. So
but as you said, but if you start out correctly, you're at 0% interest for the first 6 to 12 months.
which is again having that plan. So it's like even if you are at zero, you need to know what your plan is 6 months out, 12 months out, 18 months out, because that's how you want to. That's how you gotta look at it. I mean, business owners look at their month. I mean, I'm in my books every day, every quarter, every month. You know, you just got to see where everything's going. You know, you got to look back at last year. Like, wait, where was I at last year? Where am I at this year? You know, we're constantly refocusing and reanalyzing what we're doing. So the funding is just part A, but the managing of it ongoing and being a business owner, you know, you got to have a plan and have some way of kind of being ready for, hey, this money's going to be due in 6 months. This money's going to be due in 12 months. What do I need to do between now and then to make sure it's paid?
Sure.
And if things ain't working, you know, like a good friend of ours, Corey, hey, Uber, Postmates, do what you got to do till you can get where you need to go. You know what I mean? You know, leave no, as he said, leave no bags left in 2020. So things ain't working out or things looking shaky. I know a lot of business owners that'll start a business and be out Ubering at night because they got to keep the lights going on. They got to keep it going on until they turn and make that next move. It's do or die.
Yeah.
And as long as you have that mentality that I'm going to make it happen no matter what, you know, you're going to succeed and move forward.
Yeah. So, I mean, when you say that, kind of having that mindset, I know where I get mine from. Where do you get yours from? Like, what did you read? What did you watch? What did you study? Like, is there a person or a group of people? Like, where does that come from?
Oh, I've had so many mentors in life. You know what I mean? I can go back to like my swim coach. My swim coach teacher. I remember when I first started swimming, couldn't swim a lick. And you know, he was just like always on me, but he just always instilled on me that we're never quit. The high school I went to, when I went to school, at that time, a lot of African Americans weren't going to college.
Okay.
My school, when we first went in, you're here to get ready for college. So we always had that like do or die. We're going to keep it moving. Growing up in New York City, you either make it happen or you're going to get run over, and I'm not going to get run over. So,
what borough were you from?
I grew up in the Bronx.
Okay.
Cool. I grew up in the Bronx. So,
cool.
So always had that mentality of like, you know, you just got to kind of get done and get going. Yeah. And I never limit myself. I think I had great parents. My adopted parents, you know, just always instilled in me that if I thought about it, go ahead and do it, you know, but do your best. Yeah. And I always had that attitude, like I'm gonna do my best. Not that I was great at everything, but I always was like, look, if I'm gonna go it, I'm gonna learn it, I'm gonna be good at it. And I take that in everything that I try to do.
Yeah. Yeah. I mean, for me, I don't want to say there's one specific, but for me, and this was, quite honestly, it actually wasn't that long ago. probably 2001 or two, I stumbled across Jim Rohn.
I've
And
heard of him. Yeah, he's good.
and Jim Rohn, like there's many things that stand out with him. He's one of the great mentors of motivational guys like Anthony Robbins that I found out later that studied under him. But Jim Rohn had a great quote that I used for me personally, and the quote, and I'll probably get it wrong, but in Major League Baseball, right, the best batting average in Major League Baseball is a 300 average, right? But what does that mean? That means 3 out of 10 times the best player in Major League Baseball hits the ball. And he's considered the absolute best.
Right.
And all he did was step up to the plate 10 times. He hit it 3, and he is considered the mastermind of baseball. He's like the best ever. Like, who can't do that? Who can't step up and just hit the ball 3 out of 10 times?
Mm-hmm.
And that's considered the best. I mean, imagine if you hit it 4 times, or whatever. But I always stuck with that because it's like, you know what? You can fail 7 out of 10 times and still be like the best that anyone has ever seen.
Mm-hmm.
So, but what I was also going to go to, you also do business lines of credit.
Yes.
Right.
That's for more established companies. So generally you're looking at minimum of 2 years time in business, looking at financials. So at that point, you should be reporting your revenue to Dun & Bradstreet and to the business credit bureaus. And at that point, they'll side more on that business revenue and that business model to get business credit lines. It's a little harder to get. Similar to like SBA, you really got to have your profile kind of lined up, everything kind of nice and tight, and a clean package to get that to happen, because it does take a little bit more time because you're going with a more traditional lender. So the criteria is just going to be there's a higher bar that you have to hit.
But I know we touched on it briefly, but you guys actually help and provide with the guidance and assistance in doing some of that as well.
Correct. So we have some business programs where, again, it's credibility, the credibility, the 3 C's: cash flow, credit, collateral. So when we're looking at the credibility of a company, making sure your LLC is set up, making sure you got your DUNS number, your EIN number, you have your business bank account, understand what your paydex score is. There are a lot of little things that go on in the background that people don't realize, but they all add up.
Yeah.
It's never what I realize, or what I try to tell people, it's not a one or done solution. It's more like there are a number of pieces that make a puzzle that'll make the whole picture. So we're always trying to fill in the pieces to build out the puzzle to get the end picture.
Yeah, and I'll even show this as a reference. One of your loan officers mentioned to me. So I had, I don't know how many years ago it was, a credit card that was really my mother's credit card. It was a Federal Credit Union, whatever. I never actually had the card, but I think she might have had me on there as a cosigner. I never had the card. And that account's been closed for probably 20 years now, but it still showed up on my personal credit. And I said, well, do we need to get that removed? And your loan officer was like, no, do not touch that.
That's a 20-year trade line.
That's exactly
people make. I've seen more people like, oh, I'm mad at such and such company, I'm gonna close the account and let it go. But like, no, understand that one of the grading factors is how old your credit lines are. So the older your credit is, the more points you're getting for it. So leave it there. Even if you're not using it, having it on your report is much more beneficial, and keeping it open, not even closing it. Zero balance, open, charge $1 every now and then is better for you long term than if you close it, because guess what? That card that you had 10 years ago that you closed today now wipes out 10 years worth of payment history, and now we're going to your next oldest card. So now instead of having maybe a 20-year profile, you now only have a 10-year profile, or only a 5-year profile, and you're losing the strength and the leverage that you had for having those accounts for so long. And because all they see is you manage this account on time for 10 years or 20 years, and the bank loves them.
No, I mean, it's things that we should all know, and I think nobody tells us, nobody teaches us, and we find out those things after we apply and get declined.
Mm-hmm.
You know, because I mean, as you know, credit has changed. I mean, the FICO, you know, your FICO score used to be, what was the best, like a 700 or 750, or
And now it's 850.
now it's 850. Now you got another 100 points, and I was trying to get into the 700 club, and then they raised it 150 points. You know?
Yeah, I was like, I was looking at that the other day. I was like, dang, it's like, that was like, all right, get the 750. I was like, all right, I'm like 20 points away. I'm like, all right, I'm almost there. And
Right.
I look like score range jumped up to 850. I'm like,
mm-hmm.
And basically, I mean, what I have to do for it is just, I mean, like almost be operating on zero, but the ball's moved. I mean, if you look at, at that scale, before, if you had somebody in the mid sixes, you're like, oh, that's good credit.
Yeah.
That's not considered good credit in their scoring model anymore. That's fair credit.
Right. So another question on some of your programs, and I'm not sure which program would be best, but let's just use me for an example. I mean, I'm not giving you the real number, but let's say I'm in business. I've been in business for 5, maybe 10 years.
Mm-hmm.
My personal credit's good, but I have a lot of outstanding credit card debt that is showing on my personal credit. So my credit's not bad, but I'm showing that I'm maxing out stuff.
Mm-hmm.
Do you all provide like what we would call a balance transfer if you got a lower rate?
So realistically, I would look at doing more like an MC. In this case, is how I would use an MCA, because it would be more of a debt consolidation. I understand that.
And re-explain quickly what MCA is.
Merchant cash advance. So basically, I'm lending you money based off of your monthly deposits.
Yep.
But what we want to do with some of that funds is to pay down the credit card balances to get your credit card utilization to about 30-40%, because that's kind of the magic number. You get down to 30 is like ideal. That opens up full-fledged. But let's say, hey, I owe $25,000. My goal would be like, all right, let me get you down to 10 or 12.
Mm-hmm.
Let's leverage the business real quick, pay down your personal credit cards, and then let's apply for funding, because now all of a sudden your score is going to jump up dramatically, because you got to understand that the two biggest parts of your credit report, 30% and 35%. 30% is paying on time, 35% is credit card utilization. So having high credit card balances personally hurts you, but having high credit card balances on business helps you.
Mm-hmm.
So, but until you make that switch, because most people, we fund our businesses out of pocket.
Yeah.
Until we learn that it's like, hey, I need to hit this mark, and then now let me apply for stuff that I can get in my business name, because that's where the money's going anyway. So let me charge it into business. Let me keep it into business accounts and leave my personal for my personal stuff. So that way I don't have to carry high balances on my personal credit report. My balances can be with my business, because, hey, I might just be waiting for the next season to come in and I got my big order and I'm gonna wipe that down.
Mm-hmm.
Doing that on business is perfect. Doing it on a personal credit gives you a low score while you're waiting for that to happen, and then it immobilizes you. So the key is just always looking at how to get back to the leverage point that banks are going to say, yes, we're going to give you more money. Yeah. And the other trick I tell people is, before you start, if you're using personal credit, before you start thinking you're getting to the high end, if you had it for a while, you're at 30, 40, 50%, call your banks up every 6 months or so and ask for credit card limit increases.
Yep.
Because they're going to look back 90 days.
Yep.
And as long as your payment history was good and your ratios were pretty low, they're going to bump up your credit. Mm-hmm. So guess what? I'm not telling you to spend that credit, but now those balances are now a lower percentage of your overall credit. And because you're a lower overall percentage, you now get a boost in your credit score.
Yeah.
And so then you're leveraging. Now you got to do what you have to do. If you float, hey, I got to float 5, or I got to float 10, I got to float 25,000 in credit every month. I need to know my credit's 25. I need 2 times or 2.5 times what I'm going to be needing to keep on revolving in order to make sure that it's not impacting my credit score if I'm working on my personal credit until I can get into my business accounts.
Sure. Yeah. No, I mean, so like a simple example would be like, this is your credit card. It's got a $10,000 balance on it. Or excuse me, a 10,000 allowable, right? Credit, available credit. And you spend 2,500, that's 25% of your allowable. But if you do a balance increase, to maybe 12.5, it now
Mhm.
decreases it down to 20%. So
Mhm.
you're showing, like, with something as simple as asking for more credit, you're actually you could actually have the same balance and it would be a lower percentage, which actually reports differently because you're now
Mhm.
showing that you're carrying a lower percentage balance.
Definitely.
Yeah.
And that's one thing I've heard from a lot of people that aren't familiar with maybe the credit process. It's like,
Mhm.
oh, I'm scared to ask for more money. I'm like, understand there's still discipline that's involved, but
Yeah.
ask for the money and guess when you should ask for the money? When you don't need the money.
Yep.
Stock up on the money now. My good friend Corey, his
Mhm.
goal right now is to get $1 million in credit.
Okay.
Available credit. He's constantly over the last several years adding credit cards to his account. Not
Yeah.
that he needs them, but guess what? When something breaks or an opportunity hits,
Yep.
he's gonna be able to go right there. Boom! I can take care of that right then and there. He's building that track record. He's laying down that foundation, and that's
Yep.
the same thing where we have to do as business people, as just consumers in this market. That we got to understand that we need to leverage this technology, because if I'm going to be defined by a number, then I need to know how the system is played, and
Yep.
I'm going to work the numbers to my advantage.
Yeah. Yeah. I mean, I laugh. I heard it recently. The famed Rich Dad Poor Dad author Robert Kiyosaki said that the Federal Reserve is a criminal enterprise. And I laughed because I didn't understand what he was saying, but then when he went on to explain it, they're actually lending money based on zero collateral, based on backed by nothing. They're loaning you a digit from one account to another account. It's not tangible anymore. Yeah.
Not backed by any securities, no precious metals, nothing.
Right. So why would you feel insecure about asking for your digits to be increased on your credit card? Who cares? It's just a increase of balance, and you still have to manage it, as you said, but don't be afraid to ask for more.
Mm-hmm.
And which leads me to kind of what you all do as well. So we're talking about some of your introductory programs, but the way you guys are tiered is that you actually do second and third round funding as well.
Mm-hmm.
Right.
Right.
So
The whole thing is
about that.
again, like I told you before, I grow with businesses.
Yeah.
So let's say we're in the starting stage, and like, hey, you only qualify for 25K this time, but so hey, manage this 25K, do these things over the next several months.
Yeah.
Let's talk in 6 months. Let's talk in 12, 9 months. Let's see where you're at. And then let's go in and try to get some, get some more.
Yeah.
I've had one customer understand the power of an LLC. A LLC is a new entity.
Mm-hmm.
So let's say if I keep my personal credit intact, what's to stop me 6 months from now setting up a new LLC and obtaining new funding in my new LLC?
There you go.
Nothing.
You'll be paying
You
the
just have to understand the process. So I got money for this business. I got money for another business, and you can keep on doing that because the credit card companies usually don't want you to have more than 5 or 6 inquiries every 12 months or so.
Mhm.
You're gonna lose a few points, but you gotta play the number game. It all balances out once you start making some payments and things of that nature. But you do it strategically between credit card increases, knowing when to set up a new LLC to do another funding round. That's what companies do. I mean, if you look at it, if you look at startup companies, what do? They get one funding round. What do they do next? They do some more stuff. They do a little bit of work.
Mm-hmm.
And for another round, boom, they just without ready in the morning, up another funding round, is a seed round. Look at Uber. Uber still ain't making no money, but they collecting money they're still raising money, though they're losing money.
Yep.
Constantly raising money
Yep.
because they understand that their long projection on this is that we're going to get market penetration,
Mm-hmm.
and then by that time, boom. And they've already have become a part of this, the lexicon. So they're not that far away from potentially turning a profit. But these first years, they didn't spend all their own money.
Yeah.
They kept on raising money. They
Yep.
kept on raising capital. They invested that capital. They showed growth, and they kept on doing it. That's the same thing as an individual. We could do the same thing. The business is showing us exactly what we need to do.
Yeah.
We need to emulate the successful path.
Yeah, I used to, or I was taught years ago, rip off and duplicate.
Hey, I'm not trying to reinvent the wheel.
Yeah. I mean,
I'm looking at proven models, all day long. At the end of the day, it's like, this is what business is doing. I mean, I did an estate planning thing seminar a couple of days ago, and he brought out a funny point. He was talking to everybody in the room. He said, right now, the people in this room own more personally than Bill and Melania Gates. And they're like, but Bill's a billionaire. Like,
yeah.
But Bill don't own that. But Bill's not owning that personally.
Yeah.
He's transferred that over into another entity.
Yeah.
So that entity has that, but Bill's not doing that. And we gotta look at these patterns and follow them, because there's no need to sit here and wondering why things aren't a certain way when we have the opportunity to follow successful paths.
Yeah. Yeah. No, I mean, I pride myself, I guess, coming up February, somewhere in the beginning of February, it's been a year, 12 months since I actually turned on the television and all that nonsense on the news. And I've learned a lot. I've studied a lot. I actually started reading. I never read books. Like reading was like kryptonite to me. It was awful. But I've been reading and studying, and I was driving to work on Monday morning, just past Monday. And we're now like, second week of January 2020. And it was reported that America as a whole has more owed debt than the combination of 30 other countries, right? But yet, JP Morgan reported record all-time profits from 2019. So what does that say? It's like,
you gotta play the game. I mean,
you don't understand how they're doing it. They're allowing you to use their digits at a very low interest rate, or at some point zero, interest. Use their digits, their money, to then build and compound what you're building in your business.
And that's all it is. It's just leveraging one from another. It's like, look, what's better to use? If I have $5,000 or I get $5,000 from someone else, and I still keep my $5,000 in my pocket, and I put that $5,000 to work. And that's the same thing with credit. I mean, we got to understand that credit is a tool. I'm not telling people to go to Club Med or go on expensive vacations. You got to utilize this opportunity and this fund to generate you more money. I think I heard a saying was that the difference between poor people and rich people is that poor people work for money, and rich people have money work for them. So the whole idea of credit is, how do I take this money and make it work for me? Because that's going to be the key to success. That's the key to your longevity, is that, hey, I'm able to take something, plant some seeds, have it harvest, and rinse and repeat.
Yeah.
And instead of putting all of my capital online, I'm going to leverage my good name, my good score, and build my success off of that. And not saying that things don't go wrong, but I'm strong enough and I have the reserves to handle the bills and the expenses that I'm out there and make that transition. Because again, I'm always on the grind. So even if I'm down today, that means tomorrow I got to close that next deal. And as long as you have that mentality that tomorrow, like, hey, I'm getting the next deal. Like, so what? But I always make sure I have my safety net to make sure, hey, I can pay for the way I'm living, or the debts I've extended. And I know if I start hitting, like stock markets, if I know I start hitting critical levels, like I'm using more than I should be, than I was planning, then I know I need to sit down and make some readjustments. I need to see if I can get some credit line increases. I need to figure out what I need to do to course correct. So you're always looking at your numbers. I think like Shark Tank, they always say, know your numbers. So, so note on a weekly, note on a daily, note on a monthly basis, note on a quarterly basis, because things happen fluidly. And so we have to react in that fluid motion. We got to be able to stick and move.
Yeah, no, that's true. So one last question I have is, as you know, the last 2-3 years, I've been active in real estate. Which one of your lending programs is most desirable for someone who's looking to buy a property, rehab it, maybe resell it, or maybe hold it? What is the fix and flip funding? What is the deal for that?
That's a beautiful market right now. Again, paired with the credit line program.
Mhm.
So I have people that do combined loan to value, after repair value, up to like 90%.
Yeah,
So
and a bank might give you 60 or 70, might give you that.
right. So we're getting enough money. So we're talking about after repair value. So when you take that in, and we're giving you 90% of that, and we're giving you the money not only to pick up the property, but also to do the renovation and rehab. All they're looking for is that we got to make sure at the end of the market that there's a profit at the end. And so they're going to look at the numbers. They're going to look at the key factors on that is having a good contractor with a realistic repair estimate.
Yeah.
That's where the deals are make and break. If you got a contractor that's fudgy with the numbers, it's not going to work. You need you need to know your numbers are correct, because that's how they're scoring it. They're going to bring in the appraiser. They're going to look at the cost of renovations. They're going to know if it's real or not. But it's a great program. Again, you could leverage credit, not credit. And I mean, for those, as long as you have a little bit of skill, I mean, I've got companies that go down to a 600 FICO score, sometimes in 580, depending on if you've done enough of them, they'll work with you even at a 580.
Wow.
If you're like never had credit in your life, or you got poor credit, this is not the program for you.
Of course.
You have to come in with someone who has experience and expertise to still kind of qualify for it. So if you're not that perfect credit person, then you need to align yourself with someone who can be stronger, that can, let's say you're the guy that's out there hunting and finding stuff, or you're the handy person and things of that nature, then partner with someone who has that credit piece and come in and build, and then work on fixing your credit. I'm always going to go back to fix your credit. I know enough people that have credit repair companies. I have some credit repair solutions. We can talk about it at another time, but we have to understand that we're not islands. You know what I'm saying? Bring people in. Like if I'm short somewhere, what I'm going to do, I'm going to find a talent that makes me stronger. So if you're that guy that's out there and you're hunting down properties and you're finding stuff about your credit's weak, find yourself a good partner. Fix your deficiencies, so when in the future you have the option of sticking with your partner or venturing out and doing it on your own. But there's opportunity to be out there. But I mean, as long as you are willing to have balance, I think that's the key to most things that we always striving for. It's balance. It's not one or the other. We're trying to find a balance in all things. But fix and flip is great. I have a lot of companies that are even doing fix and holds. So, people are coming in now and buying properties and they're holding them. They're coming in and they want to hold them. And we're still getting high LTVs. We're getting up to 80% up to 80% refinances on some refis and some stuff. So some companies that will definitely go out there on some, 1, 2, 3, and 4, like commercial, small mixed use. That's a hungry market. It's an established market. So the companies that are in that arena, when you submit the deal, they know a good deal. They can sniff out the numbers. They've done it time in and time out. So again, but I'm always good about coupling things. So instead of saying going to a traditional lender and only having one product, I'm going to say, well, okay, what's the end goal? And let me show you the 3 or 4 things I can put together that can accomplish that. So how do we leverage what you have? Do we pull money from different buckets in order to get you the minimum exposure out of your own personal cash by leveraging products that are available for you?
Sure. No, I mean, that makes perfect sense. I mean, not to go into the credit side of it, but I've heard partnerships where you have one partner has, great credit, one partner not so good. The good credit guy will apply for funding with an organization like yours. Once he gets the approval, he'll add the other partner on as a co-signer and then continue to build their business, build their credit at the same time, because now that card is going to be reporting on their credit,
right?
Them further
relationship for everybody, and that's the thing. And that's what we got to think of, more partnerships. I mean, I've talked to some business people or future business people. Oh, I want to do everything on my own. This is not a do it on, not necessarily a do it on your own type sport. This is a team sport. When you surround yourself with people, you're going to get a lot further, because guess what? We don't know what we don't know until we work with someone who knows what we've done. And guess what? I'm going to learn. Like, look, why should I make the mistake? And figure it out and get the bumps and bruises if I could work with someone who's already done some of these bumps and bruises, and I can learn a new experience.
Yeah.
And shortcut that path and get to where I want my end goal that much faster.
Yeah.
Not saying you can't do it on your own, but it's just not going to get you there expediently, and partnerships, I think, is always a good key. That's one of the things I do with my business. I have referral partners that come in, they refer me people that are looking for stuff.
Yeah.
Hey, I'm about making sure everybody eat. You know what I'm saying? If everybody get a slice of pizza, we all fed, we all making money.
Exactly.
We're bringing things to the table.
Exactly. So one last question. I know the approval process is pretty simple. Go to the link below.
Put in your information.
Put in your information. Yep. Chris will be alerted almost instantly, 10 minutes or something.
It's on my phone. I get them all times at night. So I'm good at responding. You'll get it. As soon as you apply, you'll get a text message from me right away from my system. Thank you for coming in, giving you my contact information.
Yeah.
I mean, you go on my site, you can schedule the time you want me to talk to you. So if you don't want me to talk to you until 10 o'clock tomorrow morning,
yeah.
I mean, you want me to call you at 10, and guess what? Your phone's gonna be ringing at 10 o'clock. I'm gonna be on the phone,
Exactly.
Finding out what your unique situation is, and basically just guiding you on the right path. Because if you're not there now, most people, by the time I'm finished with them, will be where they need to be. If they're willing to learn, they're willing to be mentored, they're willing to be coached. Yeah. I'm gonna take you from A to B, and in everything else, sky's the limit from there.
Yeah. So I'll remind everybody who's watching this video, don't forget, subscribe down below, hit the thumbs up for us. Definitely do that. Chris, wow, we've been on here almost just over an hour.
Wow, I didn't think we were going to be here that long.
Right. But no, I really appreciate it. Guys, I can speak from personal testimony. Chris is a real deal. The company's the real deal. They'll help you work on your credit. They will get you, even if it's at minimum, they'll get you funding. They'll get you something set up that you can start to use and start to build. So if you don't have it, or if your credit might be a little scarred, they actually work with you. They go and pull your credit and they look at it and say, whoa, you have this negative point, you have this inquiry, you have whatever, and they'll work they'll work it through the process. So it's really simple to do. I have no incentive in selling this to anybody. I don't make a commission from Chris or from his company, but I thought it'd be great to share with you guys something that really does work for a small business person. It's a very simple program to do. So, Chris, I wanted to thank you, man. I really do appreciate you popping on here.
I appreciate the time. I love talking to the audience. And again, if anybody needs me, my link's right there below. I'm always here to answer questions. So it's like no question is too dumb. We all learn together.
Yep. And I'll throw in here the last point. Your friend and my friend, Mr. Corey. Corey and I are in a amplified race to the 850 club.
Well, he got me into the 700 club. Like working around with him, I was like I gotta get back to the 700 club. I was like, this is crazy. But now it's like they just move. As in all things, they move the goalposts. I was like, I need that 850 now. I'm like,
yeah, no,
I'm gonna make it happen.
I want to bring on. I'm sure some of them are very similar people. I want to bring on some of the credit repair people. Mm-hmm. I want Corey to come on here and explain what is it 10 o'clock at night. Corey is probably out somewhere right now.
He's picking up line bikes.
Yep, line bikes, $5 at a time. Yep, I know.
But he's working it out. He's like, look, not that he ain't successful. It's almost like that young jock thing.
Yeah.
No, you got to understand the hustle. But he's like, look, I'm not doing anything right now.
Yeah.
I'm starting out right now. This is only 3 little scooters. But guess what? He has no track record with that company.
Mm-hmm.
Once he gets a track record.
Yep. And
trust me, this dude has a bunch of vehicles.
Yep.
When he say he can go in there and kill the game, he can kill the game. Like but you got to play the game. He's willing to take the baby steps. He's willing to humble himself and start at A and not be like, well, I'm a businessman. I'm this, that, and the third.
Mm-hmm.
I should be at this level. No, he's going to start right there with everybody else, ground floor.
Yeah.
But he's going to run to the top now.
Oh yeah.
While people are like kind of like, oh well, complaining about something, he's already like, all right, how do I triple this? How do I quadruple this? How do I 5x this? How do I 10x this? Yep. And that's the path he's going to go, and he's going to show it to you right there online. Like, look, you could follow the same. The thing we talked about this year is we're teaching people how to fish. There's no handouts, no scraps. We're going to just teach you how to fish because that's what's going to get you to the next level.
Yep. I mean, I was going to say if it was called catching, everyone could do it, but fishing's different.
Yep.
You have to learn the strategy. You have to learn how to do it. Yep. And learn how to be patient and take those small steps. Because when you do that, like I think back now, 15, 20 years ago, they were small steps to me, but now it's like embedded up here. It's so simple because I'm like, I've already done steps 1 through 9. So let me do those real quick because I can get to 10 a whole lot faster because I've already done it.
Right. Because you can go from 0, you can go to 1 to 10 like that. You're like, look, I know what this feels like. All right, I got to do this. Boom, 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 boom.
Yeah.
All right, knocked out. What's the next step?
Exactly.
And that's what that's what we're doing. I love this channel. I like the idea of what you're trying to do. Bringing in different minds and just showing people different aspects of how to build a business or answering questions that they might not have known. Like, hey, how do I get involved or how do I get started?
Yep.
This is going to be a great resource. So I definitely recommend people subscribing. I think you're gonna have some. I'm looking forward to the new interviews. I'm sure you're gonna bring in some really cool people from the DMV.
Oh yeah.
Probably even further than that. But I look forward to seeing this channel. I look forward to the anniversary of the channel. That's what.
There you go.
I look forward for the anniversary.
Cool, man. I appreciate it. So once again, don't forget, subscribe below, hit the thumbs up. That's going to help us grow and expand what we're trying to do. Our benefit on here is to share what we know, to show you what we've already done, to maybe help you get further along in the process of you building your business, and expanding what you're working on. So Chris, I'm gonna go ahead and sign off now, but man, I appreciate it. And
all right, good night.
Talking to you guys soon.
All right, have a good night.
All right, you too.